Today in the grain market, soybeans eased back a little bit. That December rally stalled somewhat, so put a little cap on what's happening over the last couple of weeks. Now, news from Brazil is finalizing some export processes for a big soy meal shipments to China. So that's basically putting a little bit of a damper on this rally that we've been experiencing. And news on the trade deal is, still not yet coming through. And so kind of a little bit of that optimism is, fading a little bit. But technicals really are talking about that 942 looks like it's going to be kind of the objective for soybeans. So we're going to watch for that closely. We still have a little ways to go, maybe 10 or 12 cents. But that's what a lot of the experts are saying, that the market still has a lot of room to roll. So we're going to see if maybe some of the other contracts might give us a little bit of a tell. Now, corn did retreat as well. It seems like all the markets kind of came back a little bit. This competing data kind of capped any kind of uptrend for corn, even though it was looking very well. I think the rally stopped because the news says that the USDA, should be cutting some U.S. production, which would be great, but that's for the January WASDE report, so that's a couple of weeks away. And of course, we're just weeks away from the year end, so there's going to be a little more juxtaposition coming up. And I think some of the profit taking coming in after the markets have been rallying, and a little bit of ease from being overbought somewhat just from the relative strength index. Those are just technical things, and the amount of participation in the market has been a little bit less than we normally would have at this time, but it's kind of a holiday time. Now, the wheat was consolidating. That the trade deal optimism is slowing down, as it's slowed down on really all of the markets right now. With no Chinese business yet for wheat, all three of the exchanges were lower, so Kansas City and Minneapolis. And I think that the quality specifications for China will be really kind of like the fly in the ointment right now for wheat, because wheat has a nice advantage right now if China actually does come through with its commitment on $40 billion worth of purchases. I think that the wheat contract and a lot of the wheat industry as a whole is going to be at a big advantage if this actually happens. So everyone's keeping their fingers crossed, but right now a little bit of a pullback in that market.